Hello everyone, good afternoon to you all, and welcome to this episode of Modesty's Money Masterclass. This is episode number 33, and it's another lovely Monday and we have all it's another opportunity for us to continue to educate ourselves, and I'm bringing to you once again another fantastic learning opportunity. And today we are going to be discussing something that is very central and very vital to our financial survival, especially here in the Western world. So we're going to be talking about your credit score or your credit rating. So I've titled this Understanding and Improving Your Credit Score. Well, you only need to improve it if it needs improving. If it doesn't need improving, you just need to understand and manage it as well as you've been doing. So I hope you've all had a very good weekend, because I did, and it's another brand new working week for us and another opportunity for us to make a difference. So like we always do every Monday, we gather here to learn, we gather here to teach ourselves the basic things and the basic principles that helps improve our relationship with money. So the central focus of this broadcast or this session every Monday is to help us improve our relationship with money. All right, so I remain your man, Ikenna Umezudike, Director of Modesty Financial Consultants Limited, a financial services company based in Luton, United Kingdom, specialist in mortgages, business loans, investments, and financial planning advice, and helping you in anything financial consulting. Excuse me. So we've come again. Today, we're going to be, like I said, we're going to be looking at your credit score, understanding and improving your credit score. This is the first part of it. So we're going to be doing a couple of series on this one again. Pardon me if you feel frustrated at my habit of breaking things in parts. It's simply because I like doing justice to everything I do. Whatever I feel is worth doing well. So rather than just rush through things just because I want to enumerate as many points as possible loaded into one session, I'll take it bit by bit, because it's better for my audience to understand everything we talk about in depth, because then you can go out there and take action based on a clear-cut understanding of that concept, rather than just a half-baked information that I've given to you and then you are still lost. Okay, so I'm putting myself in your shoes because I like understanding very well in detail what I do. So whenever I deliver anything, if I can't finish it in one part, I break it down so that there is enough time for us to learn all these things. Okay, so please, if you're frustrated at me breaking things down in parts, it's just to help you and just to make sure that you grab the information in full. All right, so talking about your credit score, credit rating. You see, it's something that is very central to our financial lives, especially in this part of the world. If you live in the UK or in the US or in other parts of the world, you'll be conversant with what we call credit rating. Yeah, credit rating is basically the it's a rating that is awarded to you by credit reference agencies based on the information they have of you. And based on that, on the aggregate of that information, they now interpret it in the way lenders can view it and make an easy decision when you make credit applications. Now, some people might think or might claim that, look, I'm not bothered about credit report or my credit rating because I don't even depend on credit in the first place. So I can live on my own. I don't care about that. You might pretend that you don't care. You might pretend that you don't need it. But the truth of the matter is, there comes a time in your financial life, especially if you're in the Western world, where your credit report or your credit rating affects the financial opportunities, the financial decisions that you make, affects your financial life critically. So directly or indirectly, somehow, we are all affected by our credit reports, our credit rating, or whatever goes on around our credit reports. If not for anything, for the sake of your identity as well, because there is more to credit reports and credit rating than just being able to use it to get credit. It is also about ensuring that your identity is not being misused for fraudulent purposes. So if you keep tabs and if you're on top of your credit reports and you know exactly what it is in there and what is going on in there, it doesn't just help get you on the right path in preparation for whenever you want to obtain any kind of credit, but it also helps you to keep on top of your identification, making sure that your ID and your information is not being fraudulently used. So I have dedicated this session to making us understand this very central part to our financial lives, and to help those who need to improve theirs to do that. And if you do not have any need to improve yours and you've been managing yours excellently over time, then kudos to you. Well done. Keep it up. Keep doing what you're doing. It means you are on the right path and you're doing the right thing. But some of us might have made mistakes in the past, and those mistakes might have come back to haunt them later on. Some of those mistakes might have been deliberate. Some of them might have been out of naivety, some out of stupidity, some even out of ignorance. All right? So, but whatever it is, your credit report or your credit rating doesn't take into consideration what brought you into that situation in the first place. It is what it is. Okay? So you've made that mistake. Maybe you in the past you've taken out so much credit without actually any knowledge of what the implications of that might be. Maybe, some people, when they are new to this country and they know they can get credit cards, they feel like, oh, the credit cards, they think it's free money. And they keep taking on those credit cards and taking on those credit cards. Loans, it's, oh, bring it. Credit cards, oh, bring it. Store cards, oh, bring it. Hire purchase, oh, bring it. They keep taking it on until such a time when they are choked up with debts, and then they begin to realize, what mistakes they have made in the past. So out of ignorance, you might have found yourself in a messy credit situation, and it's reflecting on your credit report. Right? Don't worry. There is nothing that doesn't have a solution. Okay? And the only thing that doesn't have a solution is death. So you keep on fighting. You keep on doing what you do. You keep on making effort until the last breath of your life. So that's why I've dedicated this session to helping us understand these things and know exactly what it is that is affecting your credit rating and what you can do to help yourself out. So what is credit? Let's start with defining what credit scoring is. And by the way, sometimes you might be thinking or saying to yourself, well, I don't need any credit. I'm not taking any credit. I'm not going to take any credit at all in this life. So whatever happens on my credit report, I'm not bothered. You might even not know when you need it. Things as little as opening a bank account. Yeah? Credit searches are done on that. So if you have intention of opening 1 or 2 bank accounts or having any bank accounts, your credit rating is important. Even buying your car insurance, you'll be amazed that your car insurers still do credit checks on you. But we'll come to that and, to know when credit searches are conducted and what their implications are on you. But I'm just giving you an indication of some little things that you think are irrelevant, and that they have no impact on your credit rating, that because you think it's only when you go to borrow money, or when you go to buy a car on credits, that's when you are engaging in any credit activities. No. Things like opening a bank account takes into consideration your credit report and your credit rating. So basically, what is credit scoring? Yeah, this is the score that's awarded to you by credit reference agencies, and they use different parameters and information that they gather about you, your personal information, personal details, and credit information that's around you to build what they call a credit score. So, for example, if I use Experian as an example, the highest score on Experian is 999. So using your personal details and details from different credit agreements and commitments that you have, they build a score out of 999 and they award you that score. Okay, so that score basically determines how lenders view you, whether they view you as creditworthy or not. So that's what your credit scoring is all about. They gather these things from different sources. So each time you engage yourself in any credit activity, whether you open a bank account, or you've taken out a credit card or loan or hire purchase or a mortgage or anything, these things are registered on your credit report. So as time goes on, your personal information, they're already. So the credit reference agencies, that's what they call them, the likes of Experian, Equifax, Core Credit, TransUnion, Credit Karma, and you name it, Clear Score. All these are credit reference agencies. So they build this picture, which they present to lenders each time you go to a lender or an organization to engage in any credit activity. All right, so why is it important? What's the importance of this credit score? First of all, your credit score enables you to get better rates on your credit offerings. It determines what rates you're given, or if at all you get approved for any of those credit applications that you make. Yeah, your credit score determines how much options you have when you make application for credit. When you make credit applications as per credit provider. So if your credit score is a certain level, more options will be available to you. If they are of certain level, the options will be limited. It means not every lender will be willing to lend to you, or not every organization will be willing to deal with you on that basis. There are other organizations that are willing to deal with you if you are considered a high risk, right? There are organizations that are specialists in dealing with high risk customers, so they can welcome you and they can do business, they can do stuff with you, but the conditions they're going to give you are going to be are going to be stricter or even more expensive than say the high street organizations. Now, your credit scoring also proves your identity to your credit providers. When you make credit applications like bank account applications or business account applications or applications for any credit agreements, they check your identity. And the way they do your ID check is not just based on the ID documents you are sending in. Some of them don't even need to see your ID documents. They just do a credit search just to make sure that you are who you say you are. And they extract that information after they must have obtained consent from you to run that credit search. The moment you tick that box and say, okay, run a credit search, they run that credit search and they obtain the ID information. What your name is, does it match what's on the credit reference agencies? The address you say you live in, does it match it? Your date of birth, does it match it? All the past address details you've given to them, they match these things to the credit reference agencies information? And if they are satisfied that they match, it means you have passed the ID check. Yeah, they are satisfied that you are who you say you are. The other thing it does is that it helps protect you from identity fraud. Yeah, your credit score helps protect you from identity fraud, because the moment anything happens on your credit, anything happens in your name or registered at your address, there is always that alert. If you set up a credit score alert, the alert will come to your phone to say, oh, a new credit application has been made in your name, or a new information has been registered against you at this address. And quickly you can go to your credit report, log in and check. If it's not from you, you make that call and rectify it immediately. If it's from you, then there is no cause for alarm. So it protects you against credit fraud or fraud against your name. Yeah. So your credit score helps you understand how you manage your credit. When you look at your credit score and the score it gives you an indication of how you manage your credit, whether you manage them very well or you manage them poorly. These are things that your credit score is going to tell you. It also gives you details of your credit commitments, and it helps you stay on top of those credit commitments. So every loan you've taken, every credit card you've taken, every store card you've taken, every bank account you've opened, every hire purchase agreement you've entered into, the details will be there on your credit report. So you know exactly how much commitments you have, and what those commitments are on monthly basis or on regular basis, so you stay on top of that. Okay, now let's look at what the components of your credit score is. When you when you receive your credit report, when you look at your credit report, there are certain things that make up that credit report or your credit score. Now we're going to look at the ratings. There are 5 categories that you're rated in your credit rating. Hi Okuchukwu, good afternoon. Welcome on board, bro. So the first rating you might see there is very poor, right? So when your credit rating says very poor, what it means is that your credit commitments are either very poor, or there are other factors affecting your credit rating which has made it very poor. And that means that you are in the highest risk category to the lenders. Lenders view you as very high risk. So a lot, in fact, no high street lender or no high street credit organization will want to touch any credit application you make. Any credit application you make will almost be certainly turned down by the high street lenders. So there's no point even trying to get anything from the high street lenders if you are in the very poor category. There are specialists, lenders or credit organizations that specialize in dealing with customers in the high risk category. Those are the people you must be looking at. And if there are lenders or credit organizations that do lend based on credit scores, some of them have a minimum. You know, I know of a certain mortgage lender that the minimum credit score you will have should be 476 out of 999 before they can deal with you. Anything below 476, they are not going to touch that application. While some are happy to, go below 476 because they don't actually credit score. What they do is credit search. So there's a difference between credit scoring and credit searching. Lenders who lend based on credit score will lend to you based on a minimum credit score. If you qualify based on a minimum credit score, you scale the first hurdle. The next hurdle would then now be maybe things like defaults or CCJs or misplacement. How many of them have you got, and how many of them have their criteria contained? All right. So if you find yourself in the very poor category, it doesn't necessarily mean that you cannot get credits. It doesn't necessarily mean that nobody is going to attend to you. It simply means that your options are very, very limited. And if at all you get approved for any kind of credit, it will be it will be on a very high interest rate, because the rates of interest you get portrays the level of risk that you pose to the lender. So if they consider you a very high risk borrower, they're obviously going to give you some of their worst deals, But what it does is that it gives you an opportunity to then build your credit rating based on how you manage that credit. It might be at a cutthroat interest rate. If you're that desperate and you really want it and you think it's worth having, you might want to take it, and then as you manage it better, it improves your credit rating. So very poor credit, you might find yourself, maybe you're in the region of 300s to the 500s out of 999. You might find yourself within that category of very poor credit rating. Then there is the other category also called from the very poor is the lowest. Then just on top of the very poor is the poor rating. Now, if you find yourself in the poor rating, it simply means that your management of your credit commitments is better than very poor. So you're one step above the very poor rating, but you're still a high risk to the lender. So the high street lenders or the high street organizations will still reject your applications, basically, but there are still, you have more option than those in the very poor category, basically, because your score is a little bit higher. So it means that there are certain factors that actually made you better than those in the very poor category, right? So you have more options, a little more options than those in the very. It doesn't mean that your options are that wide open, but certain specialist lenders or specialist credit organizations who want to do business with you, they want to lend to you, they want to have something to do with you, but still the interest rate is going to be high. Okay, now if you move on from there, the next rating you find is fair. Yeah, so we've got very poor, we've got poor, then we've got fair. If you're on the fair rating, right, what it means is that your score is actually better than poor, right? You've climbed out of the poor category, you are now into the fair category. So what it means is that you're going to get a better deal than those in the other two categories, than those in the very poor and the poor categories. And you're more likely going to get a better deal from lenders because you pose far less risk to them than those in the very poor and the poor category. And by the time you find yourself in the fair category, you might be, somewhere within the 7 to 800s category out of 999 in the fair category. So some high street lenders will do business with you on that basis, but they will not give you the best rates that are available. Still, some high street lenders will still not do business with you on that basis, depending on the kind of business that you want to do. And if at all they're going to do, they're still going to give you a rate that's not as good as it should be, really. But then you stand a far better chance than those in the poor category and in the very poor category. Okay? Now, if you now above the fair rating is now the good rating. If you find yourself in the good rating, the credit rating, it means you are in a position to get good deals, very good deals from the high street lenders on their credit products and on their lending products, because they consider you very low risk to them. So they welcome you in open arms. You might be, you are in the 900s out of 999 if you find yourself in the good rating. It means you'll be managing your credits very well. Your information are up to date. There are no adverse credits history that is attached to you. Probably in the last 6 years, you haven't missed payments. You have not defaulted in any of your credit agreements. You have not had any county court judgments. You have not been into IVA. You have not been in a debt management plan or anything like that. So it means that when you take credit, you pay back. When you take credit, you pay back, and you have consistently managed it, and you have settled a lot of credits as well in the past. You have a lot of settled credits as well in the past, because the more credits you settle, the more it improves your credit rating. Okay, now above the good rating is now the excellent rating. Now this is where it gets a lot interesting. The high street lender, you are the darling of the high streets in this case. Every top-notch lender and credit organization want to do business with you. They will fight head over heels to do everything they can to get you. You are the kind of client they are looking for. You're the kind of customer they are looking for. They want to open bank accounts for you. They want to open business accounts for you. They want to open, offer you credit cards. They will offer you loans. They will offer you all kinds of mortgage. The mortgage deals they're going to get are going to be top-notch in credits. So you are spoiled for choice, basically, if you find yourself in the excellent rating, because it means that you are spotless. You've got your credit management spot on, right? So you have more options at far better rates than other people. You have the best rates in the market actually available to you. You are in the high levels of the 900s out of 999, and you are guaranteed the best deal. For us mortgage brokers, these kind of clients, for us, we find them the best deals in the market, right? Because they are the darling of the high street. Okay, so when you find yourself in that situation, that's what it means. That's the implication to you. Okay, so let's now look at the components of your credit report. What actually makes up your credit report? So we have just discussed about the credit rating and how you are rated from very poor to excellent, and how the implication of that. What does your credit report contain? When you get your credit report, if you haven't got your credit report, try and get yourself one. Yeah, register with any of these credit reference agencies. There are free ones available like Credit Karma and Clear Score. Those ones are free. Experian, they have a free version of Experian. But trust me, that free version is as good as really just to see your credit score. Just very scanty information. The very detailed part of your credit report, which Experian will give you, you have to pay for it. But there is a 30-day free trial, after which if you do not cancel after that 30 days, Experian will start charging you £14.99 every month, for you to have access to your credit report. If you can afford it, fine. If you can't afford it, there is no need you having it, because you can't afford it, right? It's not really a necessity if you can't afford it. But whenever you want to take out credit, before you take out any credit, before you apply for any credit, make sure you have had a look at your credit reports, especially using Experian or Equifax. Those are the two major ones that the lenders use, Experian and Equifax. If you've got to pay for it, get it. If you don't want to pay the monthly fee, you can actually call Experian and request for a copy of your credit report. That will be far cheaper for you to pay for, and they will send you that report to your address. And you have a look at your report, and then you can use it. You know what is in there before you make that credit application. Okay? But if you want to have a quick direct access to it, you pay the monthly subscription fee, log in, and then you can see and download your credit report straight away from there. Okay, so let's look at the components of your credit. What makes up your credit report? First of all, you see things like your personal information. Okay? Now, this is very, very important. In your credit report, your personal information is very important. Some people might think it's a very simple thing, but I'm gonna break it down for you now. Now, what credit reference agencies do is that they use your personal information to build your credit report. That's basically the ingredient they use. It is now from your personal information that they tap into, and they begin to extract all the information that relates to credit linked to you and the personal information that you have provided. Now, your personal information section in your credit reports will contain things like your name or any aliases that you've had in the past, things like your address, your current and your previous address will be on there, and then your electoral roll status. Your electoral roll status. Now, that's very important. I'm going to come to the electoral roll. I'm going to break all these things down for you gradually, but pay serious attention to this. Now, your name, your date of birth, and your addresses, they provide the basis for the credit reference agencies to produce your credit report. Now, it's very, very vital that these information are accurate and up to date. For you to get the accurate credit report, this information have to be accurate and they have to be up to date, because they make a huge difference. First of all, your name on the credit must be your legal name, the name on all your legal documents, the name you use in applying for anything at all, be it bank accounts, be it credit cards, be it loans or hire purchase, anything. It has to be that legal name, okay? Because that's the name that the credit reference agencies are going to recognize, and then they can match that name to any credit commitment that has been made in that name. Your date of birth must match the date of birth that you use for all your credit applications. If you make any credit applications in this country, bank accounts, like credit cards or anything, your date of birth is a must. They will always take your date of birth. So your date of birth will always match that against your credit applications. Your addresses, yeah, pay very important attention to this. Your addresses must cover all your known addresses, your current address and every address you've lived in. And most importantly, it must cover the addresses that you've had for the last 6 years. Okay? So if you have lived in this country for less than 6 years, just give, when you're filling that information out, when you are registering with the credit reference agencies, make sure you provide the address that covers the last 6 years. If you've lived there for less than 6 years, no worries. Give them all the addresses that you have. If you've lived there for more than 6 years, make sure that the addresses on your credit report covers the last 6 years wherever you have lived. Because there are certain credit agreements that are registered to different addresses when you live there. Some of those credit agreements, you close them before you moved out of that address, but they are registered at that address. So in your credit report, it will show that you took out this credit while you were at this address. Okay? So your last 6 years address history is very important. Why it is important is because the lenders, especially the high street lenders, they are only interested in what has happened in your credit history for the last 6 years. Anything older than 6 years is of no interest to them. In fact, a lot of them don't even appear on your credit report. As long as it's more than 6 years, it's wiped off, right? Whether it's a CCJ, whether it's an IVA, whether it's a debt management plan, as long as it's older than 6 years, it doesn't matter anymore to the credit. So that's why your 6-year address history is very, very important. Okay? Now, the longer the address history, the better and more accurate your information on your credit report and with your credit reference agencies are, and the more accurate the information they present about you are. Okay? Now, little things like updating your address details on your credit report, you might think that they don't matter. They are very, very critical and they're very, very important. I'm going to tell you a story. You see, one of my clients that I was doing her mortgage for her. So her credit rating was fair, and her credit score was like 825. So I tried to get a mortgage for her. I tried to apply for a decision in principle with a high street lender, and that report came back. That application came back declined. So I picked up her credit report, which she has sent me, because that's really why we always request our clients to send us their credit reports before we proceed with their mortgage, because we want to see exactly what's going on there and be able to choose for them the right kind of lender. So I thought this lady had, I thought she was registered on the electoral roll at her current address. But then I realized that some of the credit commitments she told me she had was not reflecting on the credit reports that I had. So when I made this application and it got declined, I picked up that credit report again, and I spoke to this lady and I said, okay, let's go through your address history. So we went through her address history, and it happened that her current address where she lives is not reflecting on the credit report. So what did we do? I said, okay, let us update your address history and make sure that we cover at least the last 6 years. We did that just on her credit report account, online on the computer. We did that. We updated her address history. Okay? And then we sent it off, and then it got updated by the credit reference agencies. Now, 24 hours later, we went back to check that same credit report. Guess what has happened? That credit report has jumped by as much as 114 points, from 825 to 939. She jumped from fair to good, and she was just 22 points away from excellent credit reports within 24 hours. What did the magic? Updating her address history. And by updating her address history, her name was now placed on the electoral roll registered at her current address. So that change alone made a lot of difference. All right? If she was not, the reason the high street lender returned that application as a decline was because they couldn't find her name on the electoral roll at the address that she currently lives in. So my dear, if your name is not on the electoral roll at the current address where you reside, I implore you right now, right this minute after this video, go and get it sorted. If you're not sure, get your credit reports and make sure your name is on the electoral. That might be the reason things may not have been as good as they were. So imagine the difference this made within 24 hours of just updating address on the website on our credit report, and the difference it made. So I picked up my phone and I called the lender the next day, and I said, look, there's been a change, a significant change in this client's circumstance. Look at what happened. What can we do? The lender said, fantastic. With this change now, go and cancel the previous application you made and do a fresh one. And I guarantee you it will come back as approved. Yeah? I'm going to get on top of that immediately after this, because so you can see what a change it made. So electoral roll is very, very important, that wherever you live, your name is registered on the electoral roll at that address. You will not believe how much difference that makes, because what it does is that the lender is not sure that you are living at that address. The only thing that will convince them is that a credit reference agency can corroborate that information by having it on your record, on your credit report. The moment you have it, it increases your chances and it improves your credit report. So always update your details and always make sure your name is on the electoral roll registered at your current address, especially where your credit agreements are registered against. Okay? Now, the other thing I wanted to talk to you about is about an organization called CIFAS. They are called the Credit Industry Fraud Avoidance Scheme. Now, some people, they find their names registered on CIFAS. If your name is registered on CIFAS, yeah, it simply means there are two things that could have happened. It's either you've been indicted by a credit organization as being part of a fraudulent activity, or your name has been used for fraudulent activity, or you've been a victim of a fraudulent activity. If you've been a victim of a fraudulent activity, your name on CIFAS is not a problem. It just simply means that the lenders should be careful when they are processing applications that relate to you because you've been a victim of fraud. If the lenders have reported you for either a mortgage fraud or credit card fraud or any kind of fraud, and they put your name on CIFAS, you'll be given an opportunity to defend yourself and prove that you're not guilty of that. If you're able to prove that, your name will be taken off CIFAS. If you're unable to prove that, your name remains there for 6 years. And for that 6 years, trust me, no lender will want to have anything to do with you. Yeah? CIFAS will tell you that, no, don't worry. You know, it doesn't mean that lenders will not deal with you. It simply means that they will be more careful when processing your application. That is theory. In practice, no lender will want to have anything to do with you if your name is on that fraud scheme, on that CIFAS register. So it's a database that is kept. In fact, in 2017, the Home Office joined the scheme, the CIFAS scheme. So they are now working together with CIFAS to identify people who have been indicted of fraud or any kind of fraud. So when people pay money into your account, it's important that you know who is paying money into your account and protect your account with everything you've got. Okay? Because somebody could pay money into your account and that money could be fraudulent money. Before you would understand what's going on, the account is closed and your name is forwarded to CIFAS as being part of a fraud gang. And then you will have to go and deal with it. So the moment you find out that any suspicious payment or any fraudulent payment has been made into your account, or you cannot identify who made the payment, and you cannot investigate and find out who made the payment, call your bank. Don't just report it, return the money. Yeah? Tell your bank, there is a payment in my account. I don't know where it is coming from. I don't know who's paid this money to my account. I cannot recollect making this kind of transaction. Return the money back to sender. That's all you've got to do. Okay? If you report and you don't return the money and you spend it, you are an accomplice. If you return the money, you report it and return it, then that settles it. Your bank takes note of that and then they return the money and that settles it. But if you become part of a fraudulent activity and your name gets onto CIFAS, you're going to be in what I call a 6-year financial imprisonment. For 6 years, trust me, no lender, no high street organization, nobody wants to have anything to do with you because you've not been able to disprove the fact that you're part of a fraudulent activity. So guys, it's not worth it. No matter how much is involved in the fraud, if you have any intention of making anything meaningful out of your life, right? 6 years is a long time. Don't get involved in anything fraud. Don't let your name get to CFAS at all. Because within that 6 years, you might think the money you might make from that fraud might look big to you at that moment. But trust me, the moment you cut yourself off from the main line of financial credit supply and high street opportunities, it's not very easy and it's not very palatable. 6 years is a long time for you to have to deal with different things. Okay, so it's not really worth it. CFAS, but CFAS record will not appear on your credit report. It's a separate database. Even though you will see on Experian a section dedicated to CFAS, but usually even if your name is on CFAS, it will not appear on Experian or your credit report because it's a separate database. Lenders and credit organizations search it separately from your credit report, and they make decisions based on that. Now, the other thing that you find on your credit report, or the components on the credit report, are new accounts. Now, these are accounts that you have opened in the last 3 months. They could be bank accounts, they could be credit accounts, they could be loans, they could be credit cards, they could be hire purchases. Any credit agreement you've entered into in the last 3 months will appear in the new accounts section. Now, each new account represents a new credit commitment. Whether it's a bank account or credit card or any kind of credit agreement, it represents a new credit arrangement. So it will temporarily, or it will likely temporarily have an effect on your credit score. It might reduce it for a while because it means you've taken one more credit agreement, which means there is extra financial burden on you now to prove that you can manage this credit agreement on top of what you already have. So each time a new account gets registered on your credit report, it kind of reduces your credit score, because then it means you need another couple of months to prove that you can manage this new account as efficiently as you've been managing others. So opening new accounts in quick succession may not be the best option for you unless it's absolutely necessary. So you take out one credit card this month, another credit card next month, another credit card in the 3rd month, or in 1 month you have applied for 3 or 4 bank accounts or credit cards, or in the next 2 months so within 3 months in quick succession, entering into several credit agreements or opening new accounts may not be the best for you, because all of them put together might just weigh down your credit report, unless you know that you are not going to apply for any credits anytime soon, in the next 6 months after you've done that. So when you've done all that and they've been successful, for the next 6 months at least, do not apply for any new credit agreements or any new accounts. The other thing you will find on your credit report are recent searches. Okay, now whenever any organization carries out any search on you, they show on recent searches, they show on your credit report. There are 2 types of searches. There are soft searches and there are hard searches. Now, the soft searches don't leave any footprints on your credit report, right? They are just basically generic searches like ID checks. Those ones don't leave any hard footprints on your credit report. But the hard searches, they leave a footprint on your credit report, and those hard searches impact on your credit report. So every hard search on your credit report reduces your credit score, because what it means is that you are telling the other lenders that you are looking for credits. Whether it's a bank account, whether it's a credit card, whether it's a loan or hire purchase or mortgage, if it's a hard credit search, it will leave an impact on your credit report and it will reduce your credit score. So when you're making a credit application, it's important you get that clarification from the lender, whether this search they are going to have is going to be a soft one or a hard one. If they say it's going to be a hard search, make sure that application is very important, number one. Secondly, that there's a good chance of you being successful in that application. Otherwise, another hard search, that hard search will still reduce your credit score. And when they do that hard search and it does not, that credit is not approved, and then you need to go and apply to another lender, It means you are doing yourself more harm again by going to apply for another lender, and then you are carrying out another hard search on you. Which is why if you want to take, for example, a mortgage, you go and meet a mortgage broker. You bring your credit report to us. We look at your credit reports, and then we know which lender is most likely going to accept lending on this basis. And when we discuss with lenders, we know which lender is going to carry out a hard search or a soft search on you during the decision in principle stage, so that multiple hard searches don't occur on your credit. So we help preserve your credit score. So until we are now sure of the chances of that application being successful, then we can go into a full mortgage application where a hard search will be carried out. Yeah, so we are sure because we have that information. So, but when you blindly walk into banks, one bank at the other, one lender from the other, from one lender to the other, and then you keep on making these applications blindly, or you walked out of bank A and they said no, say get out, I'm going to go to bank B and ask for this thing. You go to bank B and they say get out, I'm going to go to bank C. By doing when you finish with bank A, the reports, the search is already registered on your credit report. So bank B already can see that you've been to bank A and there's a search there. So by going to bank B, they'll be like, hang on a minute, he's gone to bank A and he's coming to us. It's either he didn't get enough there or he didn't get at all. So he's coming to us for more or for that. So it looks like he's there. So the more searches that are done on you, the more desperate you appear to the lender, right? Or to a lender that you are desperately needing credit. And what message you are sending to them is that you are looking for credit desperately and you cannot live without credit. It sends a very wrong picture to lenders. So the more searches that are carried out on you within a 6-month window, the lower your credit score. So every search affects your credit score, especially when they are hard searches. So every search is an indication of your appetite for credit. And too many searches might portray you as being desperate for credit and that you over-rely on credit. We're going to hang it up here, folks, and I hope this has been a useful session for you once again. And please, all the things we've said here, please put them into action and take a look at your credit score. And I hope this will help. This can help you manage your credit score and your credit rating better than you're already doing. And if you're managing yours perfectly well, fantastic. If you've made mistakes in the past, you've got an opportunity to correct them and just keep following these guidelines that we're given, and gradually your credit rating will keep getting better and better. Patiently wait for it and it will happen, as long as you keep to these guidelines that we offer here. Thank you very much, and next week again we're going to continue on the part 2 of this topic of improving and understanding and improving your credit score, just to help as many people as possible manage their credit ratings and their credit score very well and much better than they're already doing. Thank you. God bless you. Take care and goodbye.